Right. Hello, everybody. Welcome back to another market open. Making sure you guys can hear everything when we post this online. Let the world know that I am indeed live for another market open. Let me also let the Discord know, because the Discord needs to know. Gabe always needs to know. That's the main person. Send now. Let's go to Twitter. Live market open. Market open. The market is opening. We've got some pretty decent news today. I think there's a lot of stuff going on in some of the macro. We've also got to talk about some basic stuff happening with Peloton and Amazon. That's the first story we're going to get into right now. And that's the first thing I want to talk about. And then we'll go a little bit more deeper into what we're dealing with. All right. Peloton strikes a deal to sell fitness equipment and apparel on Amazon. Now, Peloton and Amazon have had a little bit of a partnership before. The reason I wanted to cover this is because this is screaming eventually acquisition to me. Like eventually when Amazon is getting ready, I think they can acquire Peloton and like with nothing, right? I mean, it's going to be very, very cheap at the end of the day to acquire something like a Peloton, but we have to see if that ultimately does happen. Dave does. Morning. Thank you, Dave, for being here. Okay, Peloton strikes a deal to sell fitness equipment and apparel on Amazon. Peloton has struck a partnership with Amazon in a bid to broaden its customer base and sell more products in the United States. This will mark Peloton's first partnership with another retailer to sell its merchandise. Until now, the company relied on its website and physical showrooms. So Peloton obviously has been struggling. We're going to go to their stock price in a bit. And they've only been able to sell through their website, physical showrooms, and like their licensed distributors. Amazon gives them a whole new opportunity to access a whole new market base, a whole new group of people. Obviously a whole new, way to interact with people. Uriel Hernandez, good morning. Thank you for being here, Uriel. Peloton has struck a partnership with Amazon in a bid to broaden its customer base and win back investors' confidence. Now, they've also done some layoffs, which help with investor confidence as well, but obviously they've got to get a lot more people into, what they're doing in order for this to make sense. In its first foray outside of its core direct-to-consumer base, Peloton starting Wednesday will be hawking a selection of its connected fitness equipment and accessories on Amazon's website in the US. That will include its bike, which retails for $1,500 basically, its guide, which costs $295, and some of its plus subscriptions. It was up about 8% in pre-market. Let's go to Peloton stock right now and see where it's going. The interesting thing about Peloton to me is that their stock was at 150, obviously collapsed, but it's still going up based upon what we think the perception of the company can eventually become. So let's go to it right here. Peloton, where we at? Okay, so it's up 10%. It ended yesterday at 11. It's at 12.35. It's you make a cool 10% on your money. Now, obviously, if we look at the 5-year, Peloton was at 171 in 2020. So that was the height of the pandemic. That's what it was, doing okay. And then it ended up collapsing to about 822. But it's up, a decent amount since 822. AMC is at 977. AMC has collapsed since that AMC ape debacle. I don't know if there's any apes in here, but you might get mad given how I talk about the AMC ape issue. But yeah, that is one thing going on. Palantir at 806. We are dangerously close to the $7 level. And I am personally waiting for that level. I would actually like to see that level because I will be buying at that level, but we're going to see. I mean, at this point, I'm like, if you're going to go low, then go low. Go to 6, go to 7. I don't care. I will buy. The question just becomes, when is that going to happen, right? And for me, it'll happen when it happens, but I would do it when it's time for it to happen. What do we have on ape? So this is the ape token thing. Then we have Ark at 43. Now Ark got in trouble because of Zoom yesterday. I did a video on Zoom if anyone wants to check it out, and I sort of highlighted some of the issues. Bacon Bombs, thank you for being here. What's up? The issue with Zoom that Zoom's having right now, Peloton got to sell all those bikes collecting dust in the warehouse somewhere. Yep, they got to sell it somewhere. Might as well be on Amazon. Is Zoom's growing in a very linear fashion, right? So the CFO of Zoom came on CNBC yesterday, and they basically said, hey, we believe that our growth is happening in a linear way, not in an exponential way. And it's because it's a result of sales cycles and the enterprises normalizing after the pandemic has slowed down. So if that's the case, Kathy's got to get her 700 bear case on Zoom by 2026, which is a 6x from here. 1200 is the base case and 2000 is the bull case. It's hard to see where that's coming from right now. Maybe it could still happen, yes, but Zoom being down 17%, I mean, it couldn't even maintain $100. It's really hard to recognize where the growth is coming from. If anything, you see them being sold to a existing competitor for a decent amount of money. But it's also just like, wait a second, what exactly is going on here? How exactly are these guys going to get that level of growth, that level of sophisticated upside, which is what Kathy's asking for, without them being able to do that? And I think that's a really hard thing to understand. Gabe finally admitted his back. Thank you for being here, Gabe. I appreciate you, man. We have the market open in 5 minutes. President Biden is announcing his decision on student loans today as well. That decision is very likely to be that he is forgiving student loans, $10,000 per borrower to be exact. Let me get to the link right here. That is likely going to happen. And to be quite honest, I have some student loans. It's actually 10,250. So it's like, if he gets rid of 10K, it's just 250. So yeah, I'm gonna pay off that 250. Your life is boring when you look forward to a midstream. First of all, Gabe, your life is not boring. Okay, I know the little internal things going on with some of the women in your life. Okay, it's more than what I've got going on when you're getting texts from your exes. Okay, you might as well move to Texas. So I know you laughed at that. Don't lie. I know you laughed at that. Yeah, your life is not that boring. Also, very convenient question. BTW, what happened to your streams with Tom? Will they continue? I just got some text from Tom. I don't know if you can see that. He says 3:30. Let's do it. Many stories. Wow. He was in Italy for the past week, which is why he couldn't podcast. But we will be back today. So 3:30 p.m. Mark your calendars. We'll be back today. Yeah, so the student loan thing is getting done today. He's likely going to get rid of $10,000 in federal student loan debt per borrower who makes less than $125,000 per year. That is what's happening. The Biden administration has already canceled nearly $32 billion of the $1.6 trillion in outstanding federal debt. I think this is another like $400 billion they would be forgiving. I'm not sure if that's going to happen, but that's what he is deciding. Now it is interesting. It is incredibly interesting if this does happen, because one could argue that $10,000 being canceled gives people the ability to pay off other things, which helps stimulate the economy and is an offset against the money they have to print to be able to forgive it. One could also argue that forgiving it doesn't help, right? Because it only leads to more inflation. And obviously, from an ethical perspective, there are people who did work to pay that off, and now they have to pay it off. And the other people, right? Don't even have 10K. LOL. When are the Netherlands doing this? Guys, do you have more than 10K or less than 10K? All right, Gabe, I just got your 10. There's no way. Okay. All right, Gabe. All right. I got you, bro. Yeah, it's interesting. Okay, so let's go back into the market. We have 2 minutes left until the market opens. I have the cowbell today. So for those who missed the cowbell over the past week, it's back and it is ready to take action. It is right here and it's ready. Where's Tesla? 893. Tesla's up pre-market, close to the 900s. Spotify, $108. It's down from 126 on August 12th. Where's the S&P? Where's the S&P? 412. Okay. S&P was at 430, back at 412. Now, I saw a video by Jeremy yesterday, Jeremy Financial Education, who basically said buy the dip. He was very adamant about buying the dip. So you got me, and Gabe has also been saying buy the dip. So I have like 9.8K Kane stocks, 10K would be like, yeah, that would help a lot. That's why the 10K, I mean, if they do it for me, I'm not gonna lie, it's like that's 10K that's gone. So that does help, and that does mean I can put more money in the market, basically. But there's other elements to it, I guess. Apple at 167. All right, we're about 30 seconds away from the stock market open. Teladoc at 32. BBY back to $8. Oh, it's up 25% pre-market. Wow, BBY is up at 11. If you were playing BBY, you'd be up 25%. Roku's at 68. When did Roku get there? Roku was at tell me Roku wasn't at 85 last time you saw it. That's wild. All right. The stock market is open. Wake your ass up. The United States stock market is now indeed open. Enphase 284 down from 308, so that makes sense. Enphase is going down. Pinterest $20.60. Pinterest at 443 monthly active users. Pinterest in a decent level right now, $20. Obviously the highs were at like $90. I bought it at 19 at one point. Should have sold. I think I sold it like 40. Bitcoin, 21,438. Bitcoin has not been doing well. The CEO of Bitcoin, or the CEO of Coinbase, Brian Armstrong, did an interview about Bitcoin yesterday with CNBC. And in some parts of those interviews, he said that the revenue model the company has is going to be starting to transition to subscriptions versus transactions as a result of fees, primarily because the fees are unsustainable because Bitcoin is Bitcoin. So that is going to happen. And that's also, that's also going to be, it's going to be a different way for how Coinbase ultimately monetizes. Where's Coinbase's revenue? Let's go here. Coinbase 7180. Okay, so Coinbase is doing okay. After their partnership with Blackstone, they went up to like 100 something. So they're down from that. Everything is down from where it began. 801 on Palantir Technologies. So you've got Palantir literally a couple cents away from sevens. And I don't know, man. I think it could happen. Let me live United States stock market open. I don't know. It could happen. It could potentially happen. I guess we're going to see if it ends up happening. Tesla doing well. So we have some green here. NASDAQ is a little bit green, just by a very little bit, but it's enough to be up 4 points. Roku is, again, I don't remember seeing Roku at 70. I remember seeing Roku at 85. I think this happened like randomly over the past couple of days. I just didn't look at it. Ginkgo Bioworks, Kathy Wood bought a lot more of this as well. I'll actually share breaking. Amit knows who owns Bitcoin. Yep, Amit knows who owns. Let me show you Kathy Wood's buys yesterday. Let me pull that up real quick. She bought a decent amount of DNA yesterday she bought DNA, but she bought a decent amount of Zoom as well. Let's just go to that real quick. Share my screen. Here we go. Okay. So Kathy Woods from trades from yesterday. Zoom, 713,000 shares. When you talk about buying the dip on a company that she has a lot of, and I'm going to actually pull up the portfolio because I haven't seen it in a bit. Ark at $43 right now. 713,000 shares of Zoom. It's a very high conviction play for them. Ginkgo Bioworks, 190,000 shares. She also bought another 126,000 shares of Zoom in the Ark W fund, in addition to the Ark K fund. So they are absolutely bullish on Zoom. And it makes sense. They have to be bullish on Zoom because, I mean, goodness, they said it's going to be a $600 stock. If you assume it's going to be a $600 stock or $1,200 stock, you've got to buy it. You've got to buy it unapologetically at some level, which begs the question: if we're not buying Zoom and it's going to be a 12x from here, are we idiots? That's an interesting. If Zoom's going to be a 12x from here, are we idiots? Because if that's the best play in the market, if Zoom's buying a 12x. Joel, thank you for being here. I bought the dip too much, guys, and forgot about my phone bill bank account minus $100. Oh boy, yo, Joe, if you actually need 100 to hold you over, let me know, bro. I got you. If you actually need it, let me know. Chris, stop being mean in the chat. Now Ark also, this is one thing that I think pissed off a lot of people. They bought 300,000 shares of Nvidia last week, and if you look on the screen, they have just sold 231,000 in the Ark K fund, 62,000 in the Ark W fund. They have sold a crap ton of their Nvidia for a loss, by the way, after buying it last week, which is, it's not the coolest thing to be able to do. Let's look at the actual Ark Innovation funds right now in its entirety. I haven't looked at these in a while, so I'm actually curious to see this. Oh, wait, I got to share the other screen. Hold on real quick. Let me share this screen. So this is the Ark KK fund. All right. Okay, Zoom is number 2, so that's why it's big for them. Zoom, they have 7.8 million shares. Tesla, they have 1 million. Roku, 8.3. Square is still a big position for them. Square's been down a little bit heavy. Teladoc, CRISPR, Intella, Exact Sciences. DNA, where's DNA here? DNA on this fund might be a little bit lower than their genomics fund. No, 70 million shares still. They have 70 million shares of this company. I mean, when this goes to $10, if it ever does, that's a $700 million position right there, right? And then Zoom has 8 million. So that the reason they bought the zip on Zoom is obviously because they have a lot of it. And then and Spotify, they've sold about like 2.2 million shares of Spotify, but they're still holding on to 716. So it will be interesting to see if Ark actually removes the position eventually or continues to keep the position. Robinhood, they still have 20 million shares of, and UiPath, they have 20 million shares of. So they have some more where they have a lot more shares, but the stock prices are so down that it doesn't matter given the other stocks they have less shares of, but those stock prices are in the hundreds of dollars. I get paid Friday, mate. I'm good. I think I have 15K in credit. All right. Bet. If you need it, Joel, just let me know. If you need it, let me know. Zoom has good fundamentals at this price. I wasn't looking at it, but now I'm interested. That's also something, like, I think Zoom also has phenomenal fundamentals, even though growth has slowed down 8%. But I don't know if I'm in it enough for, the Cathie Woods of the Cathie Wood type of bull case on Zoom. But like the fundamentals, I was going through their earnings yesterday. It's not bad at all. It's not bad. All right, we got to go do a couple things. First, we're going to look at Tesla will underperform over the coming years. Here's a CNBC video, Roth Capital Analyst. I want to see this. I have not seen this yet. And we're going to see the Zoom is officially down on the RSI, 29, oversold on the RSI. Gabe, while we're watching this video, can you just please explain in the chat what does it mean to be oversold on the RSI? And I'll share that comment after this video is done. All right, Tesla will underperform over the coming years. Joel, I know you're not going to like hearing this, but let's listen to what they got to say.
3-for-1 stock split takes effect tomorrow morning. This will be the company's second stock split in 2 years. The first was a 5-for-1 split back in August of 2020. Since then, Tesla shares have risen 101%. Joining us right now with what's to come this time around is Tesla bull Garrett Nelson. He's VP and senior equity analyst at CFRA. Also, our bear this morning, Craig Irwin, who's a research analyst at Roth Capital. Garrett, why don't we start with you? You've admitted that just the stock split itself doesn't necessarily mean anything, but it does tend to mean something in terms of the stock prices afterwards. Why do you like this at this point?
That's right. Thanks for having me. So the impact of a stock split, of course, is really more psychological. Companies with improving prospects and rising stock prices tend to execute stock splits. And conversely, companies with deteriorating prospects tend to do reverse stock splits. But it is worth mentioning that academic studies have shown that post-split stocks that do stock splits tend to outperform the broader market by a wide margin over the 1 to 3 year period following the split. We also think it's an attempt by the company to lower their share price as it might.
Okay, so real quick, this guy is saying the split actually is being used in a way that's a little bit more manipulative by the company to try to gain more interest, which indicates that they potentially think there's not enough interest or they think they're not going to be able to grow as much. Let's keep listening to what he has to say.
Might appeal to more retail investors. Tesla has a very avid retail investor base.
Hey, Craig, we're calling you the bear this time around, but that may not be completely fair. You've got a neutral rating on this company. You do give Tesla props for the most recent quarter, and you point out that they are the EV leader. You just think that there could be some better value elsewhere. Where are you looking?
Yeah, so I am neutral and with a 250 price target on valuation, right? Tesla's the leader. They've created the market. They've done an impeccable job. I think there is much better value elsewhere. You've got a $900 billion company, 3 times the size of the largest automaker in the world, Toyota. And last year they had 1/10 of the sales. Nothing Tesla has can't be brought to market rapidly by Toyota. You've got a lot of other very good choices to invest in. I guess Ford and Ted Keynes tell a great story about the Ford Pro spinoff coming next January. You've got some good things going on with Stellantis. People love the Rivians. I can go on, right? That the Taycan outsells the 911 now. People have options. And I think if you look at relative valuation and the credibility of all these other vehicles coming to market, I think Tesla will likely underperform over the next few years, and people are better off picking up another horse.
You do agree, though, that with the point that Garrett was making, that retail investors are pretty important. This move does cater to the retail investor and tries to keep them in the game.
Retail is essential. Retail is essential for my entire space, covering sustainability and clean technology for the last many years. Yes, this will be positive for the fundamentals behind the way retail buys stocks. A lower price stock is easier for them to accumulate. It is also very good for liquidity, which is good for all sorts of different things, but obviously retail is a part of that. I think it does show a sign of confidence, right? They're looking at 40,000 vehicles a week in production by the end of the year, more than 1.9 million units in capacity. it's they're incredibly well teed up to keep selling great cars. I just think that people are much better off looking at some of these other options out there, and I think many of them are very high credibility and likely to be much better value at this point.
Tesla's.
Okay, so one of the arguments they made there is this common thing we get, which is like Tesla's 3 times the value of like all the other car manufacturers' market caps combined. I think the problem that a lot of these analysts miss on, and this is something that even I, as not being a Tesla shareholder, is able to understand, their technology is actually worth that. I mean, if they get full self-driving right, which is what the market is betting on and what they've showed to at least have the capacity to be able to do, given the superiorness of their products and their AI and all that stuff, it's just like they've solved it. They've solved the one thing that deserves that premium. And if they solve that one thing to deserve that premium, then, you've got a really big shot for it to keep going well. Chris says that Palantir should partner with a website that some of you probably watch. Optimized search algorithms. You're funny, Chris. You're funny. Okay, let's go back to Webull before we get back into CNBC and see what's going on there. Palantir's actually running up right now. It's at 814, so not too bad, or 811. Hold on. Here we go. Where is it? Webull. There we go. 812 right now. Palantir, nothing too crazy. Ark at 44. Ark is up about 2%. Tesla in the 900s, basically up about 1%. Market's turning a bit more green. It's a very flat green, nothing crazy. Zoom is up 1.92%, but not bad. Look, Zoom, I actually am very interested. Gabe, I want you to, so Gabe said the R size when it's above 30. I want to talk a little bit more about Zoom, or at least dig deeper into it. Because at $82, they're growing up, they're doing $4 billion in revenue. What's their market cap? $24 billion. So they're doing, what is it? They're 1/6 of their revenue is their market cap. What's their price to sales? Price to sales is 6. That's not that bad. They only have 300 million shares outstanding. It's not Palantir with like 2 billion shares. I don't know, man. And you've got Ark that's in it. Like at the end of the day, Ark has 8 million shares and they are keeping to buy. I'm not saying that's because that means you follow. That just means there's probably a bit more upside versus, but then again, Teladoc. Teladoc's one of those stocks that it went down from 300 to like 70, 80, and they kept buying, and then it just collapsed to 30. Same with UiPath. So you're also just like, can the ARK index on a stock really matter at the point where it's just, really bad? I like that 2 of my top 5 holdings are on your watch list. Yes, that is correct. A for a minute. Lawrence, thank you for being here. People who compare Tesla to other auto manufacturers ignore 2 things. Auto manufacturers have a ton of debt and Tesla's way more profitable. Yeah, Tesla, I think it's like 30% profit. That's like it, or margins. It's like no car company manufacturers have that. AI Day 2 on September 30th is going to be very interesting for Tesla. We're going to see what they've been working on. We're going to absolutely see what they're working on. Gabe says he wrote a 25 Palantir puts at a 750 strike, got $1 premium. I have a total of 125 Palantir puts at 750 strike as of today. Well, we'll see if we get to 750. I mean, if we do, I wouldn't be bad about it. All right, let's go to another video that I wanted to watch on CNBC. And this is the Twitter whistleblower stuff. So I don't know how much you guys know about what's going on, but we're going to get an update. Basically, a whistleblower inside of Twitter said the company has more spam and bots, and they've been, let's say, mischievous in disclosing some of this stuff. And this might end up impacting the Elon Musk case. So let's hear what's going on here.
But Twitter, maybe someone's trying to make some money somewhere. I don't know. But we are now 55 days away from the trial between Twitter and Elon Musk over the billionaire's bid to buy the company. Now a whistleblower coming forward claiming Twitter deceived regulators and its own board about deficiencies in cybersecurity and prioritized user growth over fighting spam. Twitter saying the complaint is, quote, riddled with inaccuracies and that Zatkow was fired for poor performance and leadership. Joining us right now to discuss what this means for Elon Musk's legal fight with the social media giant is Tulane law professor Ann Lipton. Ann, this in some ways seemed like a bombshell in terms of exposing some of the interactivity at Twitter, raising lots of different questions. However, the question isn't, I think, necessarily what that all portends for Twitter itself, but what it portends for this case and how a judge is going to look at this and say, Do we need to go through discovery now in a way that we didn't before? Do we need to look at the bots the way Elon Musk is asking, or don't we? Do you think this has changed that dynamic?
It might, although in some fairly unusual ways. I mean, Musk's headline claim for why he gets to walk away from the deal is that Twitter misstated its MDAU figure, monetizable daily active users, that Twitter said it had a certain number and claimed that only 5% of that was spam, and that in fact more of that number was spam. That's Musk's headline claim. It's what is in most of his papers. Now, the interesting thing about this whistleblower is that he actually agrees with Twitter on this. He agrees that Twitter's figure, the monetizable daily active user figure, is basically accurate, and that they basically try to minimize the amount of spam within that figure. So to that extent, it actually contradicts a lot of what Musk has been saying, and it is good for Twitter. But then it also opens up this Pandora's box of all these other kinds of issues. The lying to regulators about consumer privacy, insufficient security, intellectual property issues, like all these other things that appear nowhere in Musk's filings. Like they're simply just brand new complaints about how Twitter runs the platform. And so the real question is whether these singly or in combination are so bad for Twitter's business that they would give Musk grounds to walk away based on the idea of a contractual material adverse event, something so bad.
And where do you, and Ann, on that, if that's the issue here, that this becomes a material adverse event, effectively, is it one? Is this material?
I mean, material itself is a very low bar. Material adverse event or effect is actually a much higher bar. It would have to have some kind of long-term impact on Twitter's financial future. That's basically what it would have to be. And to be honest, I'm just not in a position to really be able to gauge. You can read this without, I don't have the technical background, but you can read it certainly as somebody who is a good faith employee. I wouldn't say disgruntled, but who just disagrees with management about how to run the company. He does make allegations about misleading regulators in the United States and abroad. And if that's true, then possibly there really are some significant fines, and that's the kind of thing that really you could worry about whether we get into that territory. But all I can say is that that's a really high bar for Musk to meet, and he'd have to ask permission of the court to reopen his filings, basically to allege all this new stuff that hasn't been part of the case up until now.
All right, real quick thing I want to clarify. Amit, please clarify to your viewers that when I wrote puts, that means I'm bullish. That way you sounded bearish. Yes, writing puts is bullish, not bearish. Now, the interesting thing about the whistleblower thing, the super interesting thing here is that if it ends up being correct, there is a world in which Elon Musk could basically say, hey, we want to lower the acquisition price because there are some things here that simply prove our argument. If Twitter was worried about fighting, not fighting spam and bots in order to increase the users' perception to advertisers, that means there's a lot of fluff in the advertising to those users, but those users aren't actually being advertised to in a meaningful way for the advertiser. But Twitter gets the claim that it is. So if they want to keep the bots there because it gives them a bigger aspect of users, Elon basically gets to argue that it is theoretically, and this is where you get to the gray lines, materially adverse, right? And because of that, that can potentially either lower the acquisition price or get rid of the deal. I mean, I think Elon kind of wants to buy it. I just don't know if he wants to buy it at 44 billion. Or yeah, it was at 44 billion. Yeah, it was 44 billion. Let's go to Twitter stock. Twitter's at 39. Wow, that whistleblower thing knocked it down. It was at 44. It knocked it down to 39.55. Oh, so the market thinks that whistleblower thing was pretty bearish for Twitter at the end of the day. Okay, all right. Roku at 69. Snowflake at 155. Snowflake has earnings today. I know Chris is not here anymore, but Chris, Snowflake is earnings today. This is going to be an interesting day, given we see what happens with Snowflake. I don't expect Snowflake to do necessarily bad, but I am interested to see how Snowflake is able to perform. They did guide to be a little bit more lower. Google down to 114. I was actually watching an interview with Sundar Pichai, the CEO of Google, the other day. Very interesting guy, man. Very interesting just to understand a little bit more about the company. Microsoft also down a bit at 275. Amazon at 133. I think some of these stocks are a little bit pricey given where we are in the market right now and given we don't have any clarity. Like I would love to be a shareholder of Google at around 90. Now that's a pretty precipitous drop that I would expect for that to happen, but I don't know. I mean, we got to see. We've got to see. I feel like anyone who says they know which way the market's going to go right now has no clue, because everyone, when it was at 360 on the SPY, said it's going down. This is the apocalypse, and it shot up to the moon over a month and a half. And now people are saying, oh, it might go right back down to lower lows. It might just come back, right? So, like, I think no one truly knows. The one thing I do know is I want to DCA more on Palantir. What's your cost? Right now, I'm still at 19, man. 1930 is my cost. So I would have to put at least like 10K to get it down to 15. Unless the Palantir price can go really low, right? If it can get to like $5 or $6 and I load up, I can get that average super low. So we're going to see. We are going to ultimately see. All right, let's look at another video on the CNBCs of the world. Again, Ark buying a lot of DNA. That is also another thing that's very interesting to me, because in the next bull market, if it does happen at the level that it happened last time, obviously we would probably expect DNA to go up pretty big, given what we're seeing. All right, last video for today. Let's watch this one. Do not let market emotions knock off your long-term plan, which is kind of what we all need to hear, right? So let's listen to this. Let's see where that goes.
You've got a really good view about what's happening. What's happened over the last couple of months of the summer, and has it been a surprise to see this strength in the equities market?
Well, Becky, good morning. The markets have clearly been a wild ride all year. I couldn't be more proud of the work our advisors have done alongside clients, helping them stick with long-term plans and asset allocations. I wouldn't say surprised by the rebound in the markets. We felt that the sentiment was incredibly bearish a couple months ago. Markets have been sold off, which is why our team has spent so much time trying to help clients stay focused, medium and long term.
So what do you think happens now? If this summer wasn't a surprise, what comes next?
Well, I mean, on an immediate basis, we're very balanced in our view right now. As clients are coming to us with cash, we're suggesting that they step into the market, dollar cost average in. That's just good, strong, solid advice. But what we're also doing is trying to help people pivot to think about, where do you want to have money invested for 2023, 24, 25? One of the big traps right now is, hey, we're living in a rearview mirror. There was a lot of volatility behind us. Now is the time, though, as we come into the fall, let's pivot and think about where the opportunities going to be out ahead of us, and sectors that Mike just talked about. Healthcare, when you think about energy, when you look at, in particular, some more solid areas of technology, this is where investors want to be putting cash to work.
Andy, the last couple of months have been good for the market, but this year has been really rough. What have you heard from your clients? Is there a breakdown in younger investors and older investors, how they react to some of these things? What are they asking? What are they seeking? And what are they ready for?
Well, I think to a certain extent, what's happened around our business and businesses like ours reflects how the wealth management industry has matured over the last couple of decades. We did not see spikes in volatility, spikes in trading activity in the first part of the year. What we did see was a substantial increase in terms of advisor-client conversations. Financial planning conversations and meetings we have with clients, which we track, were up 60% year over year. And in those meetings, what we find our advisors doing more often than not is helping clients, stay anchored to asset allocation. Don't let the emotions of the moment, the crosswinds in the market, knock you off your long-term plans. If nothing has changed in terms of your risk tolerance and your goals, the portfolios that have been set are probably solid, and the work that's there to be done are topics more like tax loss harvesting, thinking about, some more limited tactical rebalancing. That's been the nature of the activity. As I said, that's a world apart from what dynamics felt like in the Merrill Lynch business and businesses like this years ago.
Okay, Apple is down a bit. What he said was obviously, you got to go long and keep your stocks in the play. I mean, long term, if you don't think Palantir is going to be up more than $8, right? Like, it's just a question of opportunity cost of where you want to put your capital, and that's where like the actual due diligence comes in. A couple stocks I wanted to bring some attention to. Apple down 166. It was at 168, so it's down a little bit more. Apple I don't know if it's a CFO. It's someone who's very high-ranking C-suite in Apple. Sold a hell of a lot of their position at 175 at the market top, but they sold it in February 2022. So it was a scheduled pre-sale. I didn't think they were going to catch the top, or they probably didn't know they were going to catch the top, but they caught the absolute top. I think like the real top was like 178. It was like $2 away from 3 trillion, or it hit 3 trillion for like a day at 180. But they caught the top at 175. That is a major level that I think is important to think about. Like for Apple to be able, again, Apple has, look at this, 16 billion shares outstanding. That's not because of dilution. That's because they have so many stock splits. So for Apple to move to get to 180, there has to be a significant amount of those shares that are bought in the market. Like people really have to buy this stock to move something like this. Tesla, how many shares does Tesla have outstanding? Because it's about to be multiplied by 3. They have 1 billion. Okay, so Tesla's gonna have 4 billion shares outstanding. Not as much as Apple, but nonetheless, when Tesla gets to $300, to move Tesla is gonna be a little bit harder as well because you have 4 billion shares, right? So this is important to think about when we're talking about, getting the S&P back to 450, 430, whatever. Like Apple can't stay stagnant and the S&P is going to the moon. That doesn't make any sense. Apple has to move with it, which means for Apple to become a $3 trillion company, I don't know. I think it's I don't know what the catalyst for that is. I know they have their iPhone 14s coming out and all that stuff, but like you've got to imagine there has to be some momentous stuff in the market for it to move simultaneously together. And I think that's one thing to think about as well, which is why some of these stocks that are down, it's like, all right, might be an opportunity to average down, or this might be a time to wait. Nvidia down at 169, down from 179 on Monday. So Nvidia is down a bit. Their earnings weren't phenomenal, but again, in the long term for Nvidia, it might make sense. The reason I never bought Nvidia was because I saw the run up in October 2021. Let me try to get to a good chart here. Yeah, this was the run up, right? It was at $30 in 2019, and then it got to what? $63 in 2020. So that's a nice 100% gain from 2019 to 2020. And then it runs up to 119. You're like, okay, this is pretty good. And then it stays flat. And then from 126 from April 2021 to 346 by November 2021. So we got April, May, June, July, August, September, October, November. You have 8 months where it goes 200 something percent. And now it's right back down to those same levels that it was at in May 2021. The reason I never bought this is because I remember seeing this, especially right here from October to November. It went up almost 150%. I remember watching that. I was very naive back then, but I remember watching that. And I was like, I know I should not be buying this. I'm like, I am absolutely catching something that's already at the top or has very little more room to go. And it's a little scary to buy it. And what we've seen is the collapse right from that. Now, the collapse is still pretty well. If you look at 146 compared to just 3 years ago at 30, that's what, like a 5x? Yeah, basically a 400% return. But the problem is most people bought it in this range in the 200s. And so did Kathy. And that's why she just sold out last week. So Nvidia, I mean, a lot of those stocks have the same exact thing that have happened over the past couple of years, which is the interesting thing. And that's what we're going to be able to see. All right, that's it for me today, guys, on the Market Open live stream. Thank you guys so much for joining. I appreciate you guys. I will be doing late night stock talks today at 10 p.m., so I will be there. A couple more videos coming out a little bit today. I have a video with Chris coming out today about why he invested in my startup. It's called Why This Ex-Palantir Investor Invested in My Startup, so hopefully you guys enjoy that. Thank you so much for listening. Thank you so much for being here. I appreciate all 130 of you. Today is Wednesday, middle of the week. If the week hasn't been going so well, try to make it a better week. Try to keep it going. Try to keep it pushing. Try to just keep grinding because I know life's a grind, but ultimately we gotta keep going. Thank you so much for being here. I appreciate everybody. I will see you later tonight around 10 p.m. late night stock talks or tomorrow in the Market Open. Bye-bye, everybody.